Hey guys, welcome back to the Passive Money Podcast. If you haven't seen us before, my name is Alex and this is Kirby. Today we're going to talk about another way that you guys can have another form of income other than maybe just your day job. And this form of income that we're going to be talking about is dividends. So before I start talking on dividends, because I love dividends, Kirby, what do you got on as far as maybe what you're invested in or what your idea is? What do you like about the dividend stocks in the stock market?
Dividend stocks. I like them because it's just that's probably the truest form of passive income that most people will come across. I mean, besides we got the videos about buying parking lots and things like that. But usually, long as and this is a simple Google search, you can invest in the dividend kings and aristocrats. Companies that's been paying dividends and increasing their dividends for the past 25 and 50 years or more, and you buy them and then you start receiving a dividend, and then you reinvest the dividend and have your dividend check buy more shares to have a bigger dividend payment in the future. So that's my ideal on it. I love dividend stocks, and a lot of people think, oh, that's for the old people, especially the new young guns in the market. That's for the the older people. But dividend investing, if you let that thing compound for a long period of time and you keep putting your money in there, it'll take you a long ways and get you to financial freedom way faster than trying to gamble on penny stocks.
Right, right. Yeah, like I mean, I know for like in my case, as we talked about, we haven't talked about it on this channel, but I'm invested in three companies that pay dividends. And the way I have it set up is basically one company is going to pay me, 1 month, the other will pay me the next month, and so forth, so that I'm receiving dividends every month. In dividend stocks, it's cool. Like you said, like it's passive income, in its truest form, but it really does take a lot of capital to really see any
Yes.
kind of money in it. Um,
Yes.
I'd say like in one of the stocks I'm invested in, I've probably got about 11, 12,000 invested, and I'm seeing, 150 bucks every quarter. So, I mean, that's what, 50 bucks a month if you break it down. So, which
Mm.
is not a whole lot. I mean, it's kind of cool if you put it in the perspective of like, oh, that could pay my phone bill or whatever. Like, it's
Mm.
cool that way, but you got to think like the amount that you're actually putting in, so that if that's 12,000, then see 500 a month in that form of breakdown, it would be $120,000. So,
Mm.
and it's not to say people can't build up their portfolios to that amount, but
Mhm.
it really does take a lot of investing, but just enjoying it in its truest form, that it is passive income. You don't have to do anything. You invest in a good company and they continue to pay you every quarter. That's what I enjoy about it.
And another thing, a caveat to that, like it's 11,000 now and it's paying you 150 bucks a quarter, right? But
Right.
then if you just let that money, have you ever looked at a compound calculator? Pull it up now. Pull up a compound calculator and see how much that 11,000, just keep investing. You're young, so put 40 years on there. How much that dividend will be in 40 years if you compound that dividend yield right now, and then of course you reinvest in it. Pull that up and see what it looks like. All right, there you
Okay.
go. All right. So now put in your initial investment.
Okay. So we got, let's say 12 grand.
Okay, and then monthly contribution. So it's what 50 bucks is the wait. Put
Yeah, I mean,
in
so the
zero.
so the dividend is, 150 bucks a quarter. So I guess you could say 50 bucks a month if you're breaking
No,
it down.
no, put zero. Put zero. Put zero there.
All right.
Put length of time. Put 40 years.
All right.
All right. What's the dividend yield on it?
So it's at 4%, around there.
When you start buying it, what yield was that?
When I started buying it, it was at 7%.
So put 7%. All right. Variance range, nothing. Frequency compound annually. Not calculate.
Yep. Just leave it there.
See? So
Thank you. Thank
so a little bit ago, if you want the instant gratification of a lot of money coming in, a lot of coming in. Yeah, you need a lot of capital, but if you want to use longevity of it, that is, look at that. I mean, if it just, and imagine you're in a dividend king or aristocrat, so that yield that you receive at 7% now, every year is going, that dividend is going to increase. So that interest is going to be higher based on your initial investment of total how much it is. I mean, of course, if you look on the CNBC and look at the yield now, that's not where you bought it at. You bought it at a lower price. That yield stays the same, and because of the dividends that's producing. So if the stock goes nowhere for 40 years, and it just, and let's say the dividend goes nowhere for 40 years, that $12,000 is going to grow to be 179,000. But you know it's a dividend king or dividend aristocrat, so that dividend is going to keep increasing. So that number is going to be way higher than it is now. So again, like you were saying, you need a lot of capital if you want the instant gratification of the money coming in. But if you got a long horizon and you just looking at, hey, when I'm 65 and retired, where my money will be at, 12,000 get you to 159,000, and that's without putting no more money in.
Right, right.
That's the power of compound interest, like we talked about in the previous video. Warren Buffett only invests in dividend stocks, and he started at 12. He didn't reach that billion until he was 60. But that compound interest, you see that curve, that especially that tail end of the curve, that last 10, 15 years, it
Yep.
really starts shooting up when it's compounding over on top of itself. By the time you get to, year 35 or year 30 to 40, every year is going to be paying you, or every dividend payment is going to be paying you what your initial investment was back here in 2022.
Right.
So so
Yeah.
that's the great part. Longevity wise, a little bit goes a long way. But if you need the instant gratification, then yeah, you need a lot of capital. But the inverse of that, I always recommend, if you playing in the dividend kings and aristocrats, put as much capital you can in so you can have more money now in the dividends, even though you're gonna reinvest in, but you will have way more in retirement. So you can actually retire and live that life where people talk about, hey, I want a vacation and I want to go do this and do that when they're vacation, when they're done working. That right there, good dividend stocks, and you putting money in it will afford that lifestyle.
Right.
And then the other part of it is, I mean, people think that, oh, they could retire on Social Security. Social Security gonna pay you enough to barely still live in your apartment or live in a house you're in. So you ain't, all the extra fun activities you thought you was gonna do in your 20s when you retire, it won't be possible if you throwing all your money out in the streets now and not putting some towards that investment goal.
Exactly. And like I'm looking right here, just on year 38 up to year 39, you can see this, right?
Mhm.
This is a $11,000 increase in 1 year. And then
Mm.
from 39 to 40, it's about 12 grand. So, or
Yeah.
another right under 12 grand.
Yeah.
And that's just, and
And
that's,
look at that total. Look at the total contribution. You see that total contribution ain't changed from 12,000?
yeah,
Still the same.
the same 12,000. Yep.
Patience is the key in dividend stocks. So yeah, that's why I love them. That's why I love dividend stocks. I
Yeah.
try to have some, in the hole everywhere you go.
Yeah.
Try to have
Yeah. Dividend. I mean, and there's also, I mean, there's other forms of income on the stock market. But I think dividends is such a great way, like we talk about in class with options, right? I would say our probably main goal in the class is creating income from options. And even though, options is I would say is pretty passive. I mean, you got to do some thinking on it, and it takes a couple seconds to click a button, but it's not like just putting money to the side and it's just paying you passively. Um,
yeah,
but options, I would say you can't always know what you're gonna get every month. It depends on the volatility, how high the premium is gonna pay for that month, what stock you're invested in, what the stock's doing. With dividends, you can basically just keep up with their reports on, if they're increasing their dividend, if you're invested in a good company like an aristocrat or a dividend king, you are pretty confident that they're going to raise, their dividend on a yearly basis. So that's
right.
that's another thing that's good about dividends.
Right. And let's not get it misconstrued. we're only talking about dividend kings and dividend aristocrats. If you don't know what those are, please Google them. There's a list of dividend kings and dividend aristocrat stock. Just because if you go on CNBC or pull up a stock chart and you see a dividend trading at $3 but got a 15%, 85% yield on their dividend, the stock is about to go bankrupt because they're not even making enough money to pay that dividend.
Right.
We're talking strictly dividend kings and aristocrats. Don't just get in any stock that just paying a dividend and think that this strategy will work. The reason why they're dividend kings and aristocrats is because they have a long track record of sustainability in different economic environments. Like some of these companies been around 50, 60. GE is not a dividend king or aristocrat anymore, but GE's been around 100 years. But there is a list online. Just look up dividend kings and aristocrats, and they will give you the list. And it updates every time a company falls off of one of those lists. The list will update. So make sure you're in a dividend king or aristocrat, and that will get you there.
Right. I mean, and just like AT&T, you know, I know they were a dividend aristocrat. They got recently taken off that list. But if you stay up, updated with the stock and what the company is doing, like with AT&T's case, you'll see that the reason why they pulled back on their dividend was to cut back on their debt, and ultimately there was a return of favor for the shareholders. They got a whole free stock in return for every share. It was a quarter of a share of the new company for every share of AT&T that they owned. And then they, explained that I believe by next year, if I'm not mistaken, either next year or the year after, that they're going to resume increasing their dividend. So,
Right.
you got to do your part on, keeping up with what the company's actually doing as well. Don't just, like you said, don't just get into a company that's paying an 85% dividend yield and just hope that, they're gonna actually keep their, payment on that every single quarter.
Yeah, and I believe you took a part in that special dividend AT&T gave with the roll off of HBO and HBO Max. And
Yep.
then what was your with it? And then that's the one you put $12,000 in, correct? The AT&T.
So I already had 12,000 invested in AT&T. The
Okay, right, right. And then so how much was the dividend, just dollar value wise,
Yeah,
of
so
HBO Max?
with the new stock, the dollar value was 3,000, a little over $3,000.
So that was 25% of return on your money right there.
Right.
Yeah, and then you're still getting a dividend from AT&T. So you should double your, I mean, just based off that equation, within the next 5 years, you will already have your, let's say 15 years, you'll have your 12,000 back, and you're still on that same trajectory that it was. And we didn't include that $3,400 that was in there
Right.
because you didn't use that $3,400 to buy more shares of AT&T. You did it to pivot to go somewhere else. And as far as homework goes on these stocks, I mean, they come out with a quarterly report. That's one report every 3 months. It takes you all of 20 minutes to an hour to read the annual report, the earnings report, or whatever. And that's 1 hour out of 3 months of your time. You just read and see what the company's doing, making sure they're still checking the boxes, make sure the company's still performing the way you think they're going to perform. If you can't take 1 hour out of 3 months to check on a company, then shame on you. But you should never go with any company just blindly and just say, oh, they're dividend king or aristocrat, just oh well. And for the most part, it will be like that because they're going to keep performing, but you still want to keep an eye on that investment.
Right. Yeah, exactly. I mean, just like in the case that we just brought up now, if you want to keep an eye on your investment to see if they're making any changes, just like AT&T did in this case that they did. But yeah, I mean, the money that was split off from that, and I'm sorry, I think I remember I had 15,000 invested. It was 3,000 they had taken out of that into a new stock, but the same amount of shares remained in AT&T. But then you can use that same money that they paid you to go back into AT&T, buy more shares because the share price was now below what it was before, and then have additional shares on top of that, or use the money for something else, which is, I use the money for a different stock for more option income. But really, it's just, using that money to go back into creating yourself more money.
We're just wrapping this up. We'll put a link to, one website that does Dividend King and Aristocrat. They pull those stocks up for you. We'll put that down there in the description. for everybody. But if you have time, comment in the comment section and tell me what dividend stocks you're holding, what dividend stocks you're playing, and where's the yield at, and if it's a dividend king or aristocrat, and maybe I can add it to my list of stocks to look at in the future to add it to my dividend portfolio.
With that being said, guys, thank you for watching the video. If you do have any questions, any investments that you'd like us to look into or talk to on any other videos, let us know down below. Don't forget to subscribe, like. Any other words, Kirby, or you good?
That's it.
All right, guys, we'll see you.